Hi, this is Zach May with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 18th of August. Starting off with the FTSE 100, which has actually had quite a volatile month, but so far we've ended on the right side for the bulls towards the higher levels, despite Friday's slight pullback. Rising trend channel there from back in September last year, 50-day moving average around the 8200 level, and the longer we stay above at least the floor of that rising trend channel, 8250, then we're looking for 8400 plus. Hopefully by the end of this month. Big picture target would be to head up to the top of that rising trend channel, up towards 87.30 by the end of next month, although obviously August, September not famous for rallies, and on the downside hoping that we won't get anything lower than that 50-day line. Moving on to the DAX, which if anything has been rather more dramatic than the FTSE. We had two gaps down earlier this month, and bear trap below the 200-day moving average. That's the black line there, 17,500. We've managed to climb back within that falling trend channel from April, the floor of that channel there at 17,800, and looking for the top of that channel at 18,600, hopefully over the rest of August. The big picture here is obviously that rising trend channel from back in September heading towards 20,000, but again, one wonders what could trigger a move that high. Moving on to the Dow, and here the picture, one of basically echoing what we've been seeing at the other markets. So basically looking for the this market to head back towards the best levels. We've got a resistance line there from back in July. That's currently around 41,100, and that's the initial target here. We've also had bear trap island reversal, so gapping down at the beginning of the month and then gapping up last week. That makes us feel that the top of the channel there at 42,600 could be possible by the end of next month, and ideally we stay above at least the 50-day line there, 39,500 in the meantime. On to Bitcoin, which I suppose of the major markets has been the one which has looked rather threatened over the course of August. Here, unlike the indices, we've not managed to get too near to the best level. So ideally, the scenario here would be to head back to 70,000 and that March resistance line. But so far, struggling near the floor of that rising trend channel from last September and the 58 to 59,000 area. Risk still of a move down to the February support line projection, currently at 51,000, but at the moment, this market holding steady, maybe because of the sharply rising 200-day line there, just near 62,000. The other point to note is the way that the RSI so far still had three peaks near the RSI 50 level, which tends to be a negative for a market. Obviously, there has been some follow-through on the downside, but that failure near RSI 50 is quite concerning. Moving on to gold, and this is the star of the show, where everyone telling us that we've had end-of-day close or a record close above 2,500, and we were looking for 2,600 by the end of this month. The top of the channel now up to as high as 2,620. Still looking for that perhaps by the end of this month, or at least sometime during September. And the upside valid while we hold above the recent swing support there around 2470. RSI is still actually relatively calm given where we are, around 65, so not overbought yet. We had 4 bounces off RSI 50, which I think is something of a record, and obviously the market has behaved accordingly. Worst on the downside would be the floor of the channel there around 2410, but not expecting anything lower than 2450 at a stretch at this point. Moving on to the stocks, and starting with AudioBoom, where as the management hasn't bought any shares for a while, maybe the shares have had a chance to bounce. Here we bounced off the floor of that rising trend channel from back in October. Actually, the rally there started with an unfilled gap to the upside, so that did actually work rather well. But unfortunately, over the last few months, we're stuck in a range between 220 and 260 and really waiting for that to break. What is encouraging, though, is the way that the 200-day line is now rising sharply, and that could be a sign, a bit like it was at Novacyt, that we are ready for a decent rally. Obviously, that is a punchy call, and AudioBoom has disappointed in the past, but let's see if that rising 200-day line will do the trick. I suppose the other point to note is that the 50-day line is also rising, so the next time they cross, which should be over the next few weeks, it will be, or could be, a golden cross for that stock. So let's see. While we're above 220 anyway, feeling a bit more confident about AudioBoom. Next up is a stock which I don't think many people chart, and you can see why from the chart, which is Cykel AI. Here, just a break of that trend line there. It could be a triangle break, looking obviously for 7.3, 7.4, which was the recent high, but actually, after the consolidation we've seen and the push for the RSI through the 30 level, actually looking for or dreaming of a target there at the 50-day line towards 12 pence by the end of next month. Obviously, if that call works, it will be quite impressive. On to Contango, where some people still have PTSD from the wash plant saga, but the company's put that beside it now, or behind it rather, over the recent past. Rising trend channel base, sharply rising 50-day moving average at 1.2 pence. And the longer we stay above that, the greater the chance of a move up to the 200-day line there at 2 pence. I'm looking for that by the end of next month. The next stock is Empire Metals, where we are hoping for a fresh leg to the upside. We've had one or two false starts here, but the main thing to note, I suppose, is that we've stayed above the March support area around 6.25 pence, and the V at the moment with that sharply rising 200-day line again at 6.75 pence, or 8.75 pence rather. We're looking for the shares to retest the June resistance at 12 pence plus, hopefully by the end of next month. If you are cautious, we wait for an end-of-day close back above the 200-day line, but obviously that would be giving away some of the upside. The key here is to stay above the 7 pence level and the floor of that rising October trend channel. I covered the following stock during the week, and it looks like it's wanting to behave itself. First, tin, and here the look is that we've got a bounce, and we had a double bounce there around 4.25, 4.25 pence. Now we've had a bounce above the rising 50 and 200-day moving averages, so looking for 7 pence quite easily by the end of next month, which would take the shares to retest the May resistance area. Ideally, there's no price action back below 5 pence now, and the 200-day line. Gildy Sports has got some people excited, and here, obviously a difficult situation, but looks as though we managed to put in a floor, I suppose, below 0.13, and gapped up while doing it, and that's a little mini positive setup. The upside here now 0.3, while we hold above the gap floor there around 0.13. So not for widows and orphans, that one, but looks as though a little bit of a technical sizzle over the near term. Another stock with a bit of a sizzle is IMC. It looks like finally we're getting back in business here. What would confirm it, there would be more price action back above the March support there around 1.15 pence. Initial target here up to 1.5 pence, and the rising 50-day moving average, but one to keep an eye on, I think, over the near term. Next up is Jaywing, and here the situation quite complex. It looks like it might be third time lucky for the shares to get to 4 pence plus after that spike that we had at the turn of the month. What's exciting here is the way that the 50-day line there around the 50-day line there around 1.7 pence has come in as support. In fact, the shares have bounced above that rising feature, and that does suggest or imply that we could be third time lucky in terms of getting through the 200-day line at 3 pence and then retesting the turn of the month peak through 4.5 pence. Novacyt is next, and I would argue it's probably one of the best calls that has been made here at the Bulletin Board Heroes. The excitement was the unfilled gap to the upside on Tuesday, where the rising 200-day line, we broke that line of resistance early on Wednesday at 53 pence, and obviously the rest is history in terms of what happens next, and especially given the monkeypox situation. We're looking to see whether the shares can stay above the low 80s, so 80 to 85. If they can do that, then the next level up could be up towards 105 pence, which is an old resistance line projection from back at the end of 2022. We've also got echoes of the rally the stock had back in 2020 with the pandemic. I think I can remember the shares being at 10p at that time, and obviously they rallied a lot after that. On to Neo Energy, which was another of my favourite situations of the week. And here the sizzle came from the bear trap gap reversal, and obviously the news on Tuesday. Even more helpful was pointing out the shares on the Friday, last Friday week, in the 0.4s, and the fact that they've broken the 50-day line for the first time in a couple of months. Current situation is we'd like to see the shares stay on the right side of 0.8. Maybe the worst case would be resistance on the way down at 0.75, but ideally this is a mid-move consolidation, and we head up towards the 1.2 pence area. Obviously the shares came to market at 1.25, so maybe one or two weak hands taking or exiting the situation there, not taking a profit, obviously. On to Oncimmune, and here you can see that we've got a stock which is gapped up quite nicely, gaps on the downside and then gaps on the upside. It's a bear trap island reversal, and initial target here around 15 pence. Next level would be the 200-day line at 20 pence, maybe by the end of next month. We want to see the shares, though, stay on the right side of the 50-day line, currently around 11.5 pence. Finishing off with PipeHawk, which has been requested. Rather difficult situation, this one, in the sense that the shares have just spiked higher, and it's always very difficult to get a handle on such a kind of turnaround. But here you can see that we really need to break the floor of the gap there around 2.55 pence. We can do that then, looking for the 50-day line and the top of that falling trend channel from December around 4.25 pence. But the key here, as I said, getting an end of day close above 2.5 pence plus. We did close that gap down that we had back in July, so that is a buy signal in its own right, which some aggressive traders may go for. And on that basis, then you'd hope the shares stay above the resistance on the way down at 1.8. So above 1.8, looking for 4 pence plus, but obviously a little bit of a risky situation. That's it for me today. More updates during the week.